Well, hello, everybody. Steven Sitkowski here for our market insights for the week. Hope all of you had a fantastic weekend. I got a little skiing, whole lot of fun. Bluebird Day. It is February the 26th, 2024. Just as a quick reminder, everything we do here is for educational and informational purposes only. It is not intended as investment advice. I'm just sharing my own personal observations based on 40 years plus of being around the markets. So what's moving the markets? Well, major indexes are at an all-time high, really across the board. It has been just a remarkable run. And all of that was keyed up by NVIDIA's earnings beats. So if you recall, we had 3 or 4 down days. Then NVIDIA steps up, knocks it out of the park, revenues, profits, guidance, all of it. And the market just went nuts. Outside of NVIDIA, frankly, there hasn't really been a primary catalyst, but it was enough. Goldman Sachs says NVIDIA is the most important company in the world. It's hard to beat. Amazon has joined the Dow 30. So they've sort of been elevated in their stature. The 10 years now at 4.285. So it's moved up on employment data, and oil's a little weaker at 76.87. What to watch this week? New home sales came in a little lower than expected. We have a little Fed speak. Tuesday, we have the Case-Shiller Home Price Index and consumer confidence numbers come out. Wednesday, we get our GDP first revision. That could be a market mover. But Thursday is the day for news. Initial jobless claims, personal income, personal spending, the PCE, personal consumption expenditure index. That's what the Fed looks at. Core PCE, all going to be huge. Chicago business barometer, more Fed speak. And on Friday, we got the manufacturing number coming out. So the key day next week for news is Thursday. We're going to keep an eye on that. Here's last week's heat map. NVIDIA up 9.68%, and it just keeps a chugging. Amazon 3.51%, Microsoft about 1.5%. Broadcom almost 5%, Meta nearly 2%, Walmart, Costco, Coke, PG, all really good weeks. Berkey up about 3%. Market breadth, new highs compared to new lows, pretty impressive. So this is from the S&P 500. Yeah, doing really, really well. S&P October pivot, since then it's just been a rocket ship. Hope you got your share. It was certainly out there for the taking. Just a reminder for everybody, other than the Fed, which has dominated the last 2 years, the real mother's milk of the market is earnings. So if you look and you see, so these are reported and estimated quarterly earnings growth. Fourth quarter 2023, energy down, energy sector hasn't done well. Healthcare down, healthcare sector hasn't done well. Materials down. It's been just basically stable. Big winners, communications. Now, utilities, they haven't done well. They're the only one that's really up, but have not performed very well. Technology, communications, and discretionary. And what has led the market? Technology, communications, and discretionary, as it should be. 12-month earnings estimate are expected to go higher. So all that is great for the market. What looks attractive to now when we compare debt to the trailing fourth quarter earnings before interest, taxes, depreciation, energy, and information technology look to be um, the two places where there's the most value, least amount of value on that basis. Debt to trailing fourth quarter EBITDA, utilities. So something to consider. Do we still have room to run? Of course we do. So the dark blue is current bull market. Look at this market we had from 1995 to 2000. So we can absolutely go higher than where we are today. Here is the latest inflation data. So CPI 3.11% year over year. Core CPI is problematic at 3.7. The Fed's goal, get that down to 2%. PCE 2.27, not bad. Core PC 2.6, not bad. We'll see how it plays out on Thursday. Fed probabilities of one or more rate cuts. Looks like we shouldn't expect any cut until June. That's 72% probability, July 90%. I'm leaning more toward July than June. I just think the economy is too hot to cut, but we'll see what the Fed does. And the number of cuts, kind of the probabilities here. The money's on between 3 and 4 and 1 and 2. My money, 1 and 2. That's where I think we're at. 1 year returns, sector by sector. Communications, technology, crushing it. Discretionary, exceptional. Industrials, really good. And that's been the big comer. There was a lot of value there. Healthcare has been making a comeback, as has been financials. Materials, staples, energy, REITs, just kind of, checking account returns, and utilities has been down. Let's take a look at the charts. See what's going on there. Look at the SPX, which is the S&P 500. And the chart is a thing of beauty. That yellow line is 50-day moving average. You see it sloping up. The market is above that 50-day, which is also bullish. So bullish and bullish. My friends, we are in a bullish market. How about on the Qs? So this is big tech. Same thing. A little more volatility, but all looking good. And IWM, which is the Russell 2000, and it's just riding right now. It's 50-day moving average and starting to show a little bit of signs of life. If you follow the analysts, they will tell you that the PE ratio on the Russell is about 15. On the S&P 500, it's about 20. So people are paying up. So in theory, we would expect to see this make some kind of a move. And in an election year, normally the Russell's up 16%. So keep an eye on that. All right. Well, thanks for hanging out for another week. I'll be back with you next week. And until then, be blessed. Bye for now.